Welcome back to another video. Sohail here, and today I want to teach you how you can possibly use technical analysis for discovering the next explosive move of meme coins to the moon. If you don't know what a meme coin is, meme coins are typically coins or tokens, usually without any intrinsic value, that suddenly go viral and their prices explode and go to the moon because of the interest circulated all around the web and social media platforms like Twitter, Reddit, YouTube, and other popular social media, and sometimes a recognized character or influencer tries to support it and make it more viral for any possible reason. Definitely you've heard about some guys making a massive amount of money in a short period of time by investing in meme coins. Yes, meme coins can be an excellent opportunity for making profit, but only if you play them right. You play them wrong and you're out of the game with a big loss. Many traders and investors, especially the experienced and traditional ones who are also active in other markets, believe that only an unwise and naive person trade these kinds of coins and they stay away from meme coins. And indeed, these kinds of meme coins mostly attract younger investors and traders who believe that the price is going to go up over time and they're going to be rich soon. And many of them also hold their meme coins no matter what the price is, and they just hold it in the hope of another moon. Some of these unexperienced young investors and also experienced meme coin investors would buy the meme coins when the hype just getting starting and hold it in the hope that the price will increase rapidly and go to the moon. This holding of the meme coin is not that easy you think, because the price doesn't move straight all the way up. Especially with meme coins, the volatility of the movement is extremely high and you will psychologically struggle with your fear and greed. It's just a hype that is causing the price to go up for no reason, and you found yourself just checking the social media to see what others say about the coin. By the help of technical analysis and some price action patterns, sometimes in some situations it's possible to identify starting of these explosive movements, or to discover when it's ending or when it's consolidating and getting ready to go for another explosive movement. Please pay attention that we are dealing with meme coins that don't have any intrinsic or external value, and their prices rise only because of the hype circulated all around the web and social media. And because of this, technical analysis or any other types of analysis cannot give you high accuracy forecasting, and the generated false signals can be high because the market is not acting on logic or true forces of supply and demand. So as I mentioned earlier, sometimes in some situations technical analysis can help us to discover the starting point or ending point of the movements, which by having a proper risk management strategy you can take advantage of this. Alright, let me show you how we can do it in practice. Here we have the price chart of Dogecoin and the time frame is 1 day. Here we had a massive upside movement, two explosive move as you can see. The movement started somewhere around here, April 11, 12, 13, and this is the rest of the story. We want to see if we had any sign around here that could help us to realize that something was going on and the market was about to go to the moon. As you can see here, we had a period of extreme low volatility. Let me zoom in to see the price action in this period. The price is moving in a very tight consolidation period. Let me add Bollinger Bands. Bollinger Bands, here it is. And now we can see more clearly extremely low volatility in this period. And as you can see, the Bollinger Band is tightly squeezed in this period. And if you're familiar with Bollinger Bands, so you know what this squeeze means. It shows that we're going to have a significant increase of volatility. The squeeze of Bollinger Band tells us that the price is going to break out of the upper band or lower band. Bollinger Band indicator alone doesn't give any clue on the direction of the breakout until one of the bands are broken and the price go that way. If we move more in the past, we can see that most of the time before a sharp move, we have these kinds of low volatility and squeeze in Bollinger Bands. Also another one here, also another one here, as you can see. So having a Bollinger Band squeeze, or in other words, very tight consolidation period, is very common before having these kinds of explosive movements in meme coins. I have also volume here below the chart, and you can see that in this low volatility and tight period, in 2 days we had significant increase in the volume, which is much higher than other days in this period. One was here and the other was here on April 11, which was actually the starting point of this sharp movement. If you also pay attention to the candle of this day, you can see that it broke above the upper band of Bollinger Band, which gives the signal that the price is possibly going to advance. And this coincides with significant increase in the volume, which actually shows increased interest of buying among market participants. At this point on this day also, we had significant increased volume, but the price couldn't break the Bollinger Band squeeze. Actually, it couldn't break out of this tight consolidation period. It can be considered that the smart money entered the market from this day. Actually, it's very probable that the smart money came into the market in this period. Let's add OBV on balance volume to see if it shows anything to us. And with OBV for this period, we can clearly see accumulation of the volume and how the buying volume is building in this period. So here at this point where the price closed above the Bollinger Band, actually broke this tight consolidation period with this significant amount of volume, we could enter the market. And the stop loss for this trade could be below the lowest low in this period, somewhere around here, or just below the Bollinger Band. When it comes to meme coins, discovering when to exit the market is really difficult because the market started to move, but it's not moving logically and it's moving based on hype and excitement. And you have definitely seen that suddenly market turns and declines 50%, 100%, 200%, just exactly how it was advancing. But sometimes by the help of price action analysis or some indicators, it's possible to find out when the market is going to turn. For example, here bearish engulfing pattern formed, which is a bearish pattern giving the possibility that the price is going to decline. And as you can see, the price went down more than 50% of the prior advance. But finally a hammer candlestick formed, which is a bullish pattern giving the possibility that the price may advance, and the price advanced, a sharp upside movement as you can see. And here at this high we don't have any strong price action pattern showing that the price is going to decline. The OBV also doesn't show anything. Maybe we could check another indicator like RSI, relative strength index. And yes, RSI shows divergence, as you can see, a significant divergence indicating the possibility of a reversal. Let's also add another indicator like MACD. Here it is. And with MACD also we have a divergence between MACD histogram and MACD line, which indicates that the MACD line is going to cross the signal line soon, and it crossed here, and you could possibly exit at this point. Indicators like MACD are a little late in compared to price action analysis, but not too bad exiting here at this point, because after that price went down much more, as you can see. So as I mentioned earlier, by the help of technical analysis, sometimes in some situations we are able to identify signs that show the price of the meme coin is gonna explode, or to discover when it's gonna stop and turn down. But please pay attention, I repeat it one more time, we are dealing with meme coins that don't have any intrinsic or external value, and their prices rise only because of the hype circulated all around the web and social media. And because of this, technical analysis or any other type of analysis cannot give you high accuracy forecasting, and the generated false signals can be high because the market is not acting on logic or true forces of supply and demand. And in this situation, by having a proper risk management strategy, you can take advantage of the signals like this generated by technical analysis. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you found any value in this video, please like it, please subscribe to my channel if you haven't already, and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.